Hi guys!
Hi everyone.
Welcome to our 20 Stock Weekly Challenge, and today we are having a special review episode where we will review whether the 5 stocks that we have shared from week 1 to week 5 really allows us to profit regardless of market direction.
Let's see.
Okay, but before that, let's introduce ourselves.
Hi, I'm Joe.
And I'm Sarah.
We are a husband and wife team, and we believe that together we are
better. Okay, so these are the 5 stocks that we have shared every week. Okay, so for week 1, we shared about Kraft Heinz, that was on 31st of October. Week 2, we shared about MMP, that was on 5th of November. And week 3, we shared about ICBC, that was on 16th of November. And week 4, we shared about Meituan, that was on 22nd November. And week 5, we shared about OXY, that was on 30th of November. So from the time we started till now, you can see that actually just nice 1 month has passed. And the challenge we put on ourselves is that all these stocks that we introduce must allow us to profit regardless of market direction. And today is the moment of truth. Joe, are you ready?
Let's go.
Okay, so to test this out, whether these stocks really allow us to profit regardless of market direction, okay, we have created this Excel sheet. So as you can see, we have all these stocks from week 1 to week 5 written here. Okay, these were the dates, respective dates where we shared about the stocks, and the stock price at the point of time where we shared about the stocks. Okay, and how come we were so confident that all these stocks allow us to profit regardless of market direction was because 4 out of 5 of these stocks actually is giving a very high dividend yield. Okay, so regardless of market direction, you will at least get this dividend yield from these stocks. Okay, except for Meituan, which we believe will be a potential 10-bagger. Okay, so what we did here was that we wanted to also put in the current share price to see how each of these stocks were doing after we have introduced them. Okay, so currently, KHC is at a price of $31.25, MMP at $58.96, ICBC at 81 cents, this is in US dollars, Meituan is at $13.29, this is in US dollars, and OXY is at $37.98. Okay, so now let's say someone had invested in all of these the moment we actually shared about them, and they only have a capital of $1,000. Okay, so let's do portfolio sizing. Let's divide the $1,000 equally among the 5 stocks. Okay, so that gives us 200 capital per stock. Okay, so with $200, okay, how much KHC shares can we buy? Okay, so at the point where we introduced it, the stock price was $31.45. So the number of shares will be equals to $200 capital divided by the stock price where we first introduced it, $31.45. Okay, so let's replicate the formula for the rest of the stocks. Okay, so this tells us that if you had gotten the stocks from the moment of time we shared it, you would have gotten with a $200 capital, 6 shares of KHC, 3 shares of MMP, 270 shares of ICBC, 16 shares of Meituan, and 5 shares of Oxy. Okay, now let's calculate the profit loss per share. Okay, so to do that, we will take the current share price and deduct it, okay, and do a minus to the stock price that we got it at the moment it was shared. Okay, so as you can see, oh dear, KHC, we are currently making a loss.
It's okay.
Oh, it's okay. Okay, so let's replicate the formula down and see how we did. Okay, so for easy reference, we are going to put those in profit in green and those making a loss in red. Oh dear, Joe, we are actually making 3 losses out of 5.
Yeah, but look at it. Despite the 3 losses, 2 of our gains are actually doing very well.
Okay, so let's see whether your theory holds true. Okay, so this is profit and loss per share. So let's calculate the total profit loss. Okay, that will be equals to the profit loss per share times the total number of shares that we have. Okay, again, let's drag the formula down. Okay, again, those that are in green, okay, will be profits, whereas those in red are losses. And once again, Joe, it doesn't look too good. We have only 2 winning positions and the rest are losing positions.
Try summing it up.
Try summing it up. Okay, let's take a sum of all of these. Okay, let's sum up all these. And are you ready, Joe? The moment of truth. The moment of truth. Oh, wow. We made a profit of $20.58 with $1,000 capital. Okay, so let's calculate the return of investment. So that will be equals to $20.58 divided by $1,000. Okay, so let's multiply that by 100 to get a percentage to it. Okay, so okay, let me just remove this formatting. Okay, so this gives us a 2.06%
ROI
return for
for this month.
1 month. Wow. Okay, for 1 month. Okay.
Not too bad.
Wow, this is actually quite a high return for 1 month.
Bear in mind that this does not include any option premiums and does not include any dividend payout.
Okay, so this is purely just based on capital appreciation, right? And what's interesting here is that even though we had 3 losing positions out of 5, we still made an overall gain.
Yes.
Yeah. And if we were to include actually the dividend yield, okay, this return of investment would be a lot higher. Right. Okay. And actually, if we were to project this across, I mean, if this continues to do well, 2% return for every month, then by the time we reach 1 year, it could actually even reach 24%. And plus dividend yield, that could even hit 30% ROI. Okay. So for those of you who have been taking action, congratulations, you would have gotten 2% ROI in just 1 month. Okay. So for those of you who are interested to hear what we shared about the different stocks from week 1 to week 5, you can find all the episodes in this link below. Okay, and all of it is free. It's a free website. Okay, from us.
Yeah.
Okay. Okay, so the moment of truth, our learning point is that when we combine the power of fundamental analysis and portfolio sizing, we actually can get very consistent results. Very, very good results. Yeah. And that even to the point that even if, let's say, we have some losing trades, overall, we can still make an overall gain. That's the power of fundamental analysis and portfolio sizing.
Yeah.
Okay, so for some of our friends, you may actually want to go deeper than this. Like maybe for you, 2% ROI is like not enough. Okay, or maybe you may have it in even smaller capital than $1,000. Okay, so if you really want to go deeper, we actually have an online course. Okay, that we actually crafted together with Shancia. Okay, and it's called the Deeper Framework for Value Investing. Okay, so just to share what we will actually be going through in this module. Okay, so this is actually one of the trades that we did from options. We call it the cheapskate bull strategy. Okay, so for this strategy, we actually have a total of 3 legs. Okay, so which means that we actually have 3 different option contracts being done. And this cost us $139. Okay, we did it on 27th of November. And at that point in time when we entered, okay, the stock that we are actually doing it on is actually McDonald's. And the point that we did it, it was actually $194. Okay, and the premium paid was $139 plus the commissions. Okay, we also shared the rationale as to why we were actually doing a bullish trade on this. Okay, so because it's called the cheapskate bull strategy, all we need is only $139 plus $3.75. Okay, and this is so much less capital than the $1,000 that we shared about earlier. Okay, so we are happy to share that 5 days later, we closed the position, and we closed the position when the stock price had appreciated to around 60 cents.
Yeah.
And wow, okay, the total premium that we earned was actually $103. Okay.
Yeah.
And if we divide that by our initial investment, we made 72% in just 5 days. Okay, and that's really the beauty of options. Yeah. So for those of you who really want to go deeper, okay, we'll be actually sharing about the dynamite power. Okay, that you would be able to harness if you combine both fundamental analysis and technical analysis. Okay, and of course, we cannot run away from identifying good businesses with strong economic moats, and we'll be sharing with you how you can identify those companies. Okay, and of course, entry and exit rules are important because if you enter at a too expensive price, you're not going to be able to protect your profits. And of course, portfolio management, which was the key lesson from this entire video. Okay, and Shancia, he'll be value adding to the course, okay, by adding 2 bonus sections, one on ETFs, which allows you to have an immediate diversified portfolio, and also he'll be sharing his take, and he'll be sharing about options in depth. Okay, and in fact, options is really one key strategy that allows you to profit regardless of market direction. So to prove this point, even Sean himself managed to make more than 20K from just 2K, right? And we will be revealing the exact strategy. And if you were to join us in this deeper strategy, we will be sharing very transparently with you our options trade journal. We will also be sharing with you our exact option strategies. Okay, these tend to be combination strategies, meaning it involves more than one option contract, like the one that we showed earlier that involves 3 option contracts. And the beauty of it is that it allows you to profit regardless of whether it's a bullish market, sideways market, or bearish market. And we will also be sharing with you the rationale for entering the trade, our exit plan, and our reflections upon closing the trade. Okay, even though not all trades are going to be winning trades, but if we have a proper portfolio, okay, we still are able to make very good returns from it. Okay, so for those of you who are interested, it is currently retailing at $1997. But if you really want to go deeper, you can get it at a massive discount now at this link. Okay, really, it's really a massive discount.
Yes.
Okay, now, and so that's all that we want to share for today. And stay tuned for week 6, where we will share about yet another stock that allows us to profit regardless of market direction. Okay, so till then, see you.
See you.
Bye.